Yep, I couldn't agree more. I mean, if you don't have systems and processes in place, you're going to fall apart. There's no way to keep track of all those different things. I mean, even emails that you have to respond to, I answer 100 emails a day. How am I supposed to keep track of those unless I have some type of system?
Welcome to the Real Estate Marathon Podcast, your guide in the race to financial freedom through real estate investing and sound financial practices. This podcast is for anyone interested in learning more about real estate investing, personal finances, and a new take on traditional retirement. Now, here are your hosts, Larry Fierro and Mike Moe.
What's going on, everybody? Welcome to the Real Estate Marathon Podcast, your guide on the race to financial freedom through real estate investing and sound financial practices. My name's Mike Moe, one of the hosts of the shows, and I'm joined today from the campground from post whitewater rafting, almost dying, Mr. Fierro. What's up?
Oh, dude, it was good. We were hitting some serious rapids, and I didn't think retirement was going to make me that much of an adrenaline junkie, but now I'm looking for, we did class 3 rapids, and now I'm looking to upgrade to 4 and 5. And my wife's like, you just need to rein it in, mister.
Yeah. She talked you into this, didn't she?
She did. Her and my brother and sister-in-law talked me into it. And the next thing you know, I'm in the back of a boat. It was funny because I didn't really want to do it to begin with. They talked me into it. And then on our boat, they made me the captain. So I was in charge of steering and giving them all orders. Had no clue what I was doing. But I rose to the challenge because what do we always say, Mike? Commit and figure it out. And that's what I did.
There you go, man. Yep. You did not,
awesome.
Steer them into the rocks. So that's good. Skydiving. That's what's up next, man.
That's what they said. And I don't know why anyone would want to jump out of a perfectly good airplane. That's my general rule of thumb. Airplane seems to be working all right. We're staying right inside it.
Dude, it's fantastic. I did it once. It was pretty amazing.
Was it? Nice. So you got me there. Dude. I don't think I'm ever going to jump out of a perfectly good airplane.
You should, man. You should definitely do it. Do it somewhere really scenic and nice to look at. I did it over the Swiss Alps, and it was fantastic, dude.
Oh, no kidding. So then at least the scenery kept your mind occupied.
Dude, it was nuts. It's crazy.
Nice.
Best thing ever. So that's it's on your bucket list next, man.
Let's get it done. Just talking about is making me breathe heavy. So we ought to probably just move on to the interview for today, which is an awesome interview, by the way. We had Mr. Kyle Mitchell come in. What great guest.
Yeah, man. And we talked, we got the 101 on asset management. So, we'll talk a little bit at the end of the interview about what he's got coming up with his group on the Asset Management Virtual Summit. But yeah, man, it's really a really critical thing to know and a critical thing to understand that it's like once you get the keys to that property, that's when the fun starts. And that's when the asset management starts. And it's not just, let's buy a property and forget about it for 10 years and then come back and hopefully it's still there and you can collect your mailbox money. There is a process for, owning and managing these assets to get the most out of them. So, and that's what we talked about with Mr. Kyle Mitchell.
Yeah. And it kind of boggles my mind a little bit with the proper management. You could actually almost make the property profitable for decades to come. I don't know. Is that throwing the curtain back a little bit? But yeah, if you manage it correctly, you should be able to get income from that for decades and decades.
Yeah. And it's very important. Like we talked about in the interview, I would rather if I'm an investor, I would rather invest in a mediocre deal with a stellar operator, asset manager, than, a really good deal with a poor manager. Because if you got these skills, if you can really take an asset and find the opportunities and, strengthen, the strengths of this property, you can really maximize the opportunity out of these assets. So, and vice versa. If you don't know what you're doing, you could buy a great deal and drive it right into the ground and lose a ton of money. So it's a really important thing to know in this game of the asset management side.
It is. Well, let's get into the warm up here. We're going to get you all ready to go and do the marathon. So, and one of the things we wanted to define was asset management because it's different than property management. So, yes. I always thought asset management was the same as property management. And I realized after this interview that it is not. So here's the warm up. Asset management is meant to cultivate market value so ownership can increase its returns, whether it has to do with real estate or any other asset. An asset manager manages assets on behalf of someone else, making important investment decisions that will help the client's portfolio grow. And it could be for your own company too, as Kyle said, but you're just trying to get that portfolio to grow.
Yeah. And to your point, clear distinction. It's not property management. It's not answering the tenant's calls. It's not changing, calling up the handyman to change the toilet or do any of that. That's what you have a really good property manager for, but it is managing the manager, and it is, making the larger decisions on when to sell, when to refinance, implementing the business plan with your team. So with your property managers, with, implementing, the tax strategy with your advisors and your cost segregation experts and things like that. So it is holistically looking at everything that has to do with that property, and implementing the plan and running that ship accordingly. So.
Yeah, then that was just awesome. That was a new concept for me, and when you guys hear it, it's been it was a fantastic interview. So I think we ought to probably just jump right into it and let Kyle tell you himself how great it is.
Let's do it, man. All right, Kyle Mitchell, welcome to the Real Estate Marathon Podcast, man. How you doing?
I'm doing well. Thanks, Mike, for having me on. Larry, how you doing?
Good. Thanks for coming on, man. We really appreciate it.
Yeah, super pumped to dive into your story, man. I've been watching you from afar on what you've been doing in the Tucson and the Phoenix markets, and I've been really impressed with that and like some of the meetups that you guys have been doing. So I'm really excited to jump into your story. So
yeah, absolutely. Again, thanks for having me, and really excited to be here.
Do you want to start off by giving the listeners just kind of a little bit of background on kind of who you are, what you do, how you got into real estate?
Yeah, absolutely. So my name's Kyle Mitchell. Our company is APT Capital Group, and we're multifamily syndicators in the Arizona market. So we buy value-add investments in both Phoenix and Tucson. I got started in real estate back in 2010, basically house hacking my first home. And then a couple of years later, once I took the equity out of that property, I started buying some single family homes in the Midwest. And very quickly, I learned that it's difficult to scale in single family homes, especially when you're buying them turnkey. I still had a full-time job at that point. I was just looking for some passive income. The stock market is not an investment that speaks to me. So naturally, I gravitated towards real estate. I did that for a while. And then there was a couple of years where I just stopped investing because I just wasn't happy with the way I was scaling with single family. And I was really going for a career change. My prior career, I was a regional manager for a golf management company. So much like property management for apartments, but for golf courses. So hiring, firing, implementing systems, holding people accountable, that type of thing. I did that for 15 years. But I wanted to leave that industry. The golf industry was shrinking, and I wanted to be growing, and our company was shrinking. So I took time to kind of look for an alternate career, and I didn't find anything. And then one day I was just searching on the internet, and I found multifamily. I found some course, and I signed up for it, and I was immediately hooked. I understood it because it's very much what I did in the golf industry just for apartments. So light bulb clicked in my head. 11 months later, I left my job to pursue multifamily full time. And that's kind of how I got into multifamily and started pursuing that about 2.5 years ago.
Nice. I love hearing how people take previous skill sets that they have and transfer it to multifamily. So what are some of the skill sets that you had, I guess 2-part question, that you had from your previous role that really helped you excel in multifamily? But what are some of the skill sets that people don't really know about that transfer really nicely into multifamily?
Yeah, for me, it was all that management and operations experience. A lot of people think, oh, golf, you can't relate that to apartments, but really it's what did I do on a day in and day out basis, right? I hired people, I managed people, we implemented systems and processes to hold people accountable and to drive the business. I did budgeting. I looked at numbers every day, driving income, controlling expenses. And when you take a look at the apartment industry, that's exactly what you do once you take over an apartment. So those were the skills that I was developing for 15 plus years that really fit well into multifamily. And it was one of the reasons why I was able to transition so quickly. But I think you learn experiences from everything that you do building up to the time that you're in your new career or wherever you're at in life. I think you just have to dig down and look. For me, I didn't even realize how much my experience in the golf industry was related or relatable to apartments and that I could carry over until someone actually said it, and it's more of a mindset thing for sure, to just be able to sit there and think, what's my experience? Where can I add value? And I think anyone can have some type of relatable experience from the past that can be carried over into apartment investing.
Yeah, I think it's important to explore like the model of apartment investing before you write it off saying that you don't have any skills that could transfer. Because when I started learning about it, I was really surprised that my background in retail transferred, because at its core, what I did in retail was taking a box, taking a building and minimizing the expense, putting, systems and processes in place to minimize that overhead and those expenses and drive the top line, right? Which, as you know, from an asset manager, that's a lot of the multifamily, right? Minimizing your expenses and increasing, the income coming in to improve that NOI. So it's very transferable from a lot of industries. So it's important to kind of not write your skills off before you dive into it. So,
yeah.
Yep.
And I did a lot of sales, and sales definitely transfers over into the networking and that sort of thing. And now when you were working at the golf course, were you able to adapt some of the systems that you had in place from the golf course and transfer it over into the multifamily?
A little bit. I think where I really learned a lot was also the marketing side of it. How you need to present yourself to other people. I mean, you're always selling yourself. Like you said, Larry, you have a sales background, and it's really interesting how much sales and marketing go into building a business in the multifamily industry. You don't think about that, but it really is a marketing game. And so I learned a lot about marketing the golf courses, how the golf business marketed themselves, how they used LinkedIn and things like that to reach out to people. And so there were some things like that I definitely did. The biggest thing that I learned, though, is just follow up and holding people accountable. Those are just two things that a lot of people don't do, especially with the follow up, right? They may attempt to hold someone accountable at first, but then they just completely forget about it. They expect it to be done now that they've had that conversation. And one of the most important things is follow up when it comes to anything. And so that's probably the biggest thing I learned when coming over. But there's so many things I learned in that 15-year career that helped me today.
Yeah, follow-up and accountability are two of the biggest things that get neglected that should be up towards the top of the list for any business out there. So that's I'm glad you were able to mention that, because that's one of my sticking points on a lot of these things.
I was gonna say accountability. You hit one of Larry's hot spots there.
It's a pet peeve of mine as well. So Larry, I think we could go on about this forever, but follow-up and accountability, they kind of tie together. But just because I have a conversation with someone and they tell me that they're going to do it does not mean that's it. I can wash my hands clean of it, right? You need to follow up with someone and say, hey, did you do this? You need to go check out their work to make sure it's what you were hoping for and what your vision was for it. So I think a lot of things fall apart when follow-up is not done.
And Kyle, to kind of marry up a couple of the things you said, I think people don't have good accountability skills because they don't have good systems. Like nobody can remember everything they need to follow up on or everything that they need to check on. But if you have a good, whether it's a checklist or a system or a rhythm or a weekly, monthly, quarterly rhythm on things that you follow up on, it's easier because there's something to reference. You don't have to keep it all stored in your brain on what you need to follow up on.
Yep, I couldn't agree more. I mean, if you don't have systems and processes in place, you're going to fall apart. There's no way to keep track of all those different things. I mean, even emails that you have to respond to, I answer 100 emails a day. How am I supposed to keep track of those unless I have some type of system in place to hold people accountable? So absolutely, you need those set up, and you need to do that in advance. It's all about being proactive, not reactive. And if you're reactive in this business or in any business, things fall off the wheels pretty quickly.
Yeah, for sure. So I want to pick your brain a little bit on a topic that I think obviously you're very well versed at, and it's the asset management. So we'll talk a little bit towards the end of some of these big events that you guys are leading in this space. Let's get a little bit of the asset management basics out of the way. So what's the high level framework or for a good asset manager that something that they can follow, or some high level steps that they need to make sure to key in on?
Yeah, I think we were just talking about a lot of them, which is just systems and processes that are set in place so you can hold people accountable, right? So as an asset manager, this is a job duty that a lot of people don't talk about. A lot of people are talking about, hey, how do I get started? How do I close my first deal? But not what do you do once you do close the deal? How do you manage the property, right? And so high level, that person needs to have some type of management and operations experience. And if they don't, you want to get someone on your team that does. There's so many small things that you don't think about that have to do with apartment investing that you need experience in, right? Whether it's building a budget, reading a general ledger, holding a property management company accountable, building systems for those property management companies to be successful. I mean, all these different things I think are the job of a asset manager or an apartment owner and operator for that matter. And I think a lot of the times people buy an apartment building just hoping that they get the right property management company in there that's going to take their business to the next level. And if you're relying on your property management company to fully execute your business plan, you're setting yourself and them up to fail.
Now, for a lot of the first-time operators who have zero experience, do you have any suggestions on how they can set themselves up for success?
Yeah, I mean, it really is about partnering with someone that has that experience. There's companies out there that you can actually pay to manage and operate your property. They're quite expensive. So, maybe that's the way you go on your first couple deals, but you definitely want to just team and partner with people who have experience in operating. I think on your first couple of deals, it's not really about how much money do you make? It's how much experience do you get? How much do you learn this process? So then on your second, third, fourth deal, you can go and operate them successfully. But trying to do everything on your own in the multifamily space is not a recipe for success in any manner, right? They always say it's a team sport. It certainly is. I mean, part of your team needs to have a good asset manager on board.
So Kyle, I want to try to deconstruct the asset management term, because I think a lot of people, at least coming from the single family or maybe some of the small multis, will kind of look at this and say, well, you got a property manager in place. What else is there? And to your point, there's a lot more, right? So can you detail kind of like some of the high level tasks on a either, daily, weekly or monthly basis that the asset manager really needs to be on top of?
Yeah, sure. So I can tell you some of the things that I do because I currently asset manage my properties with my business partner at this point. And we have a call every Monday with all of our property or regional managers for the properties to get an update on how the property is performing, whether it's occupancy, lease ups, market rents, renovations, just everything. We have a report that we get on a weekly basis. They send us probably 7 or 8 different reports that we look at, and we talk about the business and executing the business plan. And so that's the number one thing you want to do is be in communication with your property management company to execute your business plan. Every owner operator has a different type of business plan for each property, and the property management company needs to know that. Another thing just about managing people is communication, open, transparent communication with what's going on, why things are happening, and the direction the property's going. When COVID hit, we stopped some renovations. And so if you're not in constant communication with your property management company and letting them decide what to do, that's not smart because you're allowing them to spend your money the way they see fit. And really, it's how you need to spend your money to get the best out of your property. So that's just high level what we do. We also obviously look at occupancies during the week, collections during the week, renovations, how those are coming along, our renovation budget compared to what we have in the bank, and to plan cash flow to understand whether we can pay out our investors or not. And then another one is just holding the managers accountable, which I think this is where a lot of people don't get, is that you need to hold your property management company accountable. And it's not micromanaging in a sense, but you need to make sure that they're taking good care of your asset. If you don't try and hold them accountable and put those systems in place, how do you know that they're doing the best job that they can, right? And so we do things like shopper reports. We'll have someone do a report where they apply online at a couple of spots to lease up a unit at our property. And we'll also have someone call in and we measure the results on those. How quickly did they get back to us? Did they even call us back? Did they email us back and it looks like a copy and paste and it's not formatted very well and they didn't even answer a question that we asked in our email? Those things are a big deal because a lot of property management companies have their own systems in place and it's very plug and play. And if you want to separate yourself from your competition, you need to spend a little bit extra time helping the property management company get better in those areas. And so that's what, you do as an asset manager. You identify bottlenecks and you try and improve those processes to help the property management company improve their processes to be better.
That's awesome. Yeah, I love you taking ownership because those property managers are representing your investment to your customers, right? So it's huge to take a very vested interest in that how the performance and how they're representing it. So I love the cold calling and I like the mystery shops almost. That's awesome.
Yeah. Now, have you received any pushback from any of the property management companies that you've done for the level of accountability that you tried to implement? And if so, how did you handle that situation?
Yeah, so we're very market specific and relationship driven. So it's not like we invest in 5 different markets where we're just picking up a referral for a property management company. We vetted our property management company for 4 or 5 months before we chose them. This is prior to us even making offers, and we spent a lot of time with them. I do think that deep down they sometimes it rubs them the wrong way, right? And I need to understand that as well. But the way you have to go about it is, look, we're doing this for 2 reasons. Number one, we have investors to report back to, and we need the maximum efficiency at the property, and we need the maximum NOI. We're also doing this to help you, and you need to guide them through the process and say, okay, here's why we're doing it. And this is how it's actually going to make your job easier on the back end. Because a lot of the work that we're doing is front end work. They're going to have to put it in without seeing the results. But once they do it, it actually streamlines their business to take some off their plate and to help them do things like lease up faster. So it's about working with them for sure and making sure you communicate that in a way that's not like, hey, you got to do this, you got to do this, you got to do this without any type of explanation. It's working with them to get to the end goal together.
Awesome. What's your take on, doing the third-party property management versus bringing it in-house? It sounds like you guys do primarily third-party. What have you thought about, or are the pros and cons that you see from bringing that in-house?
Yeah. So I worked for a property management company just for golf courses, right? So I understand that business very well. And it really is a thankless business. The margins are very, very low. And the reason why you would do it is for control, to bring everything in-house, to do things the way you want to, because a lot of property management companies are not as flexible, can't customize certain things, and you want to see things a certain way. We're lucky enough that our third-party property management company has been great to be flexible and customize certain things. But, at a certain point when you have scale, it's not a huge revenue generator for the owner. Can definitely be a revenue line, but it's not a huge one. It's more for that control is why you're going to want to do it and leverage. But, on the other side of it, it's not easy having a property management company. It's a people business for sure, and you're dealing with people every single day. So if you're going to be implementing a property management company, now you're going to get phone calls 7 days a week, because you're dealing with someone who's maybe having a baby or is sick and is calling out. You need to replace that person and all that kind of stuff. And so all those headaches come with property management. Now you're going to hire someone hopefully to run the company, but there's other things to consider when you're doing that. And for me right now in our business, it's not something that we want to take on. We're heavily focused on building relationships in our markets, continuing to invest in those markets and acquire properties.
Awesome. Cool.
Now, on the performance and the accountability for your property managers, do you implement bonuses if they perform above and beyond, or do you implement penalties or whatever if they come in underneath what your projections are?
No penalties. I'm not sure how you would work in penalties. I'd love to hear, if there are ways to do that. But obviously, if they're not performing, it's a phone call with the regional manager and having a more serious conversation where we might have to let someone go. And if the regional doesn't perform, we haven't had this situation, but we have a direct line to the owner of the company, and I feel very comfortable talking to him about it if we had to. But they say, hire slow, fire fast, and you need to be on top of that. As far as incentives, yes, 100%. We have incentives for them to hit certain occupancy goals and income goals because, again, going back to it's a people business. And yes, they should be doing that anyways. And you can say that's their job, but these are people and they're working day in, day out. And really, it is a hard job to be a manager in an apartment building. It's a thankless job. You're always trying to collect rent. You're always getting pushback. There's always some fire to put out. And so you need to reward your staff for doing a good job as well.
Awesome. What are some of the biggest pitfalls that you see newbie operators, maybe the first asset that they're trying to manage, kind of get themselves into?
Yeah, allowing the property management company to do everything and control everything. I think that, you always have to realize you own that property, or at least the company you work for owns that property, not the property management company. So relying heavily on them and just letting them kind of take over the property is a big one. And then just not following up and holding them accountable, checking in on things like why it's happening. I'll give you a great example. We get monthly financial reports, and I am the one in charge of looking into those reports and every line item to make sure things are squared away. I think that a lot of newer investors think that they are what they are. Here's the reports. Here's how your property performed. on to the next month. If you don't dig into those reports, you're gonna be sorry, because there's things in there that maybe are not supposed to be charged to your property. I once found a $10,000 plumbing charge that got charged to our property that was not for our property. Some of these property management companies that are very big have hundreds and hundreds of clients, and their accountants have several other properties that they manage and they're in charge of. So it got coded to the wrong property, right? And so if you're not looking at those types of things, and if you're not looking at the accruals and how they're charging things, some things can get hit 2 or 3 times without you knowing. And so I've saved tens of thousands of dollars by just scrubbing our financials on a monthly basis. Is it a pain? Yes. Am I going to continue to do this when we have 5 or 6 properties? No, we're probably going to hire someone to do it for us. But you need to be looking into your financials on a monthly basis, because you need to understand, number one, how your property is performing, and you need to look for things that are not right in there. Because again, you have someone on the other end, it's a person plugging in numbers to your property. You need to look at that, because human error is just, it's going to happen.
A $10,000 whoopsie. Yeah, that was a good catch. Yeah. Worth the effort.
And that was on a 42 unit property. So a $10,000 charge is huge, right? I mean, because this is a smaller property. So it stuck out like a sore thumb. But at the same time, if I didn't look at those reports, we would have been responsible for it, because that was 8 months ago, right? And there's no going back on that, really, because you're not going to look 8 months in the past. So
yeah, and I think that just goes to speak to the importance of this role, the asset manager role. Like it's those details and those fine tooth combs that you guys are taking through the reports and the operations that really separate the people who just buy and hope and the people that buy and manage it, like yourself.
Yeah, absolutely. I mean, we even take on some marketing efforts for our properties on ourselves as well. Not a lot of people do that. We learned that from our good friend Neil Bawa. And then also just managing leases. You know, there's small tricks of the trade on each and every one of these items, on value add, managing the manager, lease ups, renovations management, all these things. And if you're not doing them and someone else is, your competition's going to leapfrog you pretty quickly. But just by implementing 1 or 2 items on all these things, you're going to be able to take your property to the next level and set it up for success, really.
Cool.
Nice. Now, you guys are tracking a lot for your properties. What to you are some of the most important KPIs that asset managers should be tracking while they're doing this?
Yeah, 2 things. Collections, number one, especially now going with COVID going on, we really want to know, where we are every day, how we're trending to previous months. But that's the biggest thing on KPIs. I think a lot of people just look, okay, how am I doing today? How are we doing this month? But how am I doing compared to last month and the month before that and the past 6 months? Are we trending up? Are we trending down? Are things kind of going like this? And those things are really important, so you can see that and then make an adjustment. If you're not looking back 6 months, then you're not going to be able to make adjustments on the fly, and it kind of goes back to being proactive and looking back to get better to go forward. The other thing that we like to look at is conversion ratios on leads and where those leads are coming from. So we know where we're spending our money and if it's the best bang for the buck. If we're not getting big conversions on something like apartments.com on that property, you're spending a lot of money on that. Is that money used better somewhere else, or do you even need to spend that money? And then, how many leads are being turned into showings and appointments? And then how many of those are being turned into applications? And then how many of those are being turned into actual leases? We want to track the conversions of those so that we know, okay, where is the bottleneck happening? And this is the hugest thing when it comes to asset management, is identifying bottlenecks, right? If you know that you had 50 leads and you only got 1 lease, all you know is that the conversion from leads to lease is not good. But what if half those leads are they're not good leads, right? And what if another half of them were bad phone numbers? Well, now all of a sudden, okay, you didn't really have 50 leads. You had whatever that is, 12 and a half leads or whatever it is. But what if you had 50 leads and then you scheduled 40 appointments and then only signed 1 lease? Well, your conversion from leads to appointments is fantastic. Now there's an issue with, why are we not closing these people? Now we can say, okay, is the leasing agent doing their job, or is it, something else? It could be a ton of different things, but you need to identify, you need to peel back the layer of the onion a little bit to identify where the issue within the leasing is the problem. Because if you're only getting 5 leads a month, Well, you need to help the leasing person out to get more leads so that she can close or he can close on the property. So there's so many different areas where you need to kind of look, and you need to identify where that bottleneck is first.
That's awesome. You backed it up from, the data and the KPIs that you have available, and kind of watching that to figure out exactly where in the process and where in your business you need to focus on. So that can save, I'd imagine, a ton of headaches and a ton of time and money that you're not putting money into places that don't need it. And you're really focusing that on the point in that process that's breaking down. So,
yep. You don't know what you don't know. Right. And so if you're just guessing at what the problem is, you're going to create more damage than good.
Yeah. For sure. Yeah, that's awesome. So what do you guys usually like to see for a conversion from, people applying, let's say people inquiring to people actually applying to people actually getting, leased up?
Yeah, it depends on the property and the location and all that kind of good stuff. But what we like to see is that the leads that do come in, if they're good quality leads, right? You've got to make sure they're good quality leads. We like to see 30 to 50% convert into a showing, which is pretty high. But if we can get to 30 to 50%, that'd be awesome. And then closing 50% of them. It doesn't happen always like that, but that's the goal. And we always try and set stretch goals. But I think that at least once you have them on your property in person, you should be closing half of them. And if you're not, you either have a problem with the property or a problem with the leasing agent. And that leasing agent is another important role. And you need to make sure you've hired right in that situation. That's really a sales role. A lot of people don't think about that as a sales role, but it 100% is. And if you have a salesperson in there, you're more than likely to close on people versus having someone that maybe knows apartments but isn't used to asking for the sale. I mean, you really need someone in there that's going to push and ask for the sale and get those people in there.
Do you guys track, the people who don't lease up with you, the reasons why? So then you can, maybe if there are common themes with the property, you can help address those in future, renovations or what have you.
100%. Yeah. It's on our weekly report as to why someone said no or why someone's moving out. And then we track that week over week over week in a Google Drive so we can continue to see common occurrences. And sometimes there's just nothing you can do about it. And then other times it's like, oh man, that's easy to fix. We can get that done right now and boom, So again, that's about peeling back the layer of the onion a little bit further and diving into it versus just taking it for face value.
Very cool.
Now, when you get to the end of owning a property, what are some of the things that you can do or an asset manager can do to help prepare a property for the sale?
Yeah, I'm going through this right now, knock on wood that we get to the closing table, but we just signed a contract to sell one of our properties. So this is kind of perfect question. You need to make sure that the property is performing all the way to closing, right? All the way to the day of. I mean, the lender, it's the same thing with buying a property too, really, is that you want the seller to perform so that you can get the maximum amount of proceeds from the lender. If the property starts to dip in occupancy or dip in collections and NOI, you're going to have some issues and there may be a retrade out there, or the lender may have to cut their proceeds, so the returns for the buyer are not going to be as good. So it's really about making sure, it's all about front end work. I keep saying this, proactive versus reactive, but when you're getting ready to sell, your processes should almost be the same as when they were before, because you're doing all that work anyways, right? You're making sure occupancy is high. Your systems are in place to make sure all these things, you're tracking KPIs. And so all those things need to be set up in advance. And really it should be a smooth transition. The other thing I'd say is make sure the property management company is they're fully aware of what needs to happen throughout the sale. Okay, so we even actually do a stay bonus for our manager who's at our property to make sure she stays focused during the sale. She keeps the incomes where they need to be, the occupancy where it needs to be, and she gets a bonus at the end when we sell, and she stays on with that new owner. And that really helps with making sure the property continues to perform. If someone knows that the property is going to sell, maybe they're going to, take their foot off the gas a little bit. And that's the worst time for that to happen. So controlling expenses, doing all those things, again, you're doing them anyways, but making sure the property management company is fully aware of what's going on day in and day out. I think we're communicating now more with our property management company pretty much daily just to make sure that everything is aligned and our ducks are in a row.
That's
I love this.
Great advice. I love that.
The stay bonus is awesome because to your point, man, if some of these closings can take 60, 90, even 120 days, right? So if they know that property is being sold and they know that they might potentially be out after that, they need some motivation to stay involved in that, because if they start letting leasing slip and that occupancy dips down to a point where it might impact financing, that could have throw a huge wrench in the mix for you trying to sell that place.
Yeah, absolutely. And again, you always want to incentivize people to do better. I think a lot of people, I said it already, think that they have to do it because it's their job, but it's just not the way the world works. And so incentivizing people to do better has always worked out good for us.
Can you talk about that 42 unit and maybe just give the high level points of like what you guys saw in that from an acquisition standpoint, what systems and what things you implemented from an asset management standpoint that really kind of set you up to sell this, and kind of the high level details on that one?
Yeah, the thing I loved about the property was that it was just not being paid attention to by the owner of the property. They weren't putting much money back into it. They had changed property management companies 3 times. She's a California buyer, and just you could tell that she didn't quite understand what was going on. The thing I love the most about the property is that when we got there, I actually called the number on the sign out front and it was disconnected. And this property was not being advertised online. So the only way to lease up the property was you would have had to have happened to call this property management company, ask them, do they have any availability? And then from there, that person would need to tell them that specific property in their portfolio to lease it up. Nice. And so right there, it was just obvious that this property was just not being managed right. And that's a type of property that I really like, because our management skills and our operation skills fit that. And we always look for operational inefficiencies that we can go in and do a better job on. So, this property, it was really simple because, and knock on wood, but to us, it was really simple because all the easy low-hanging fruit was just not being done. And so that's what we did, making sure that you have a good property management company in there who's paying attention to the residents and to the work orders. I mean, they had 20 work orders backed up on a 42 unit property the day we took over, right? That had been stacking up for months. And so there was just no one who cared about the property. And so we cared about it, and we showed the residents that we did care about it. And, we had 16 months on that property. 14 of them ended up staying, and some of them had their rents doubled, and they love living there. Now, when people say doubled, I want to make sure I clarify. Some of these rents were $300 a month. So it wasn't like it was going from $1,000 to $2,000. It was going from $300 to $600. But still, in a lower income area, that's a big jump. And it just proves that if you put money back in the property, show people you're going to make it a better place to live, and actually listen to the residents and care about them, that goes a long way.
Yeah, you showed they were getting something out of that extra $300, which was obviously their needs are being taken care of now. If actually things break, they're actually getting taken care of, right? So
I think one of the big takeaways for that, from what you just said about that property, was when you have a property you're interested in, give them a call. And if the phone is disconnected, there's definitely some opportunity there.
Yeah, absolutely. You don't find that very often, but you just have to, you don't know what you don't know. I said that earlier too, and you don't know unless you try. And so I just thought I'd give it a call, and man, it was disconnected. And so that was just a huge red flag.
I want to talk a little bit about the Asset Management Summit that your company has recently launched. Do you want to talk a little bit and explain what that is?
Yeah, I appreciate that too. There's a huge gap in the market right now where people are learning how to buy, getting your first deal, doing deals, raising money, but no one's talking about what you do once you have the deal, and a lot of the things that we talked about today. And so we put together this virtual asset management summit, and it's completely free for people that want to attend. And it's about learning how to be a better operator. And whether you're an active owner operator who has an asset manager, or are an asset manager, or even are a passive investor, you need to know about these things, because you need to know so you can hold someone accountable, whoever that is, whether it's your sponsor or your asset manager or yourself or your property management company. And we're going to be talking about a lot of topics that we covered today, but I don't think these are being talked about very much. Like, how do you manage your lease ups? How do you manage your renovations? How do you track those types of things? How do you communicate with your investors? How do you budget? Things like that. How do you go about your renovation strategy, your value add strategy? How do you manage the manager? And so all these things, there's going to be all these takeaways on how you can improve your operation side of it, which effectively drives your NOI and gets the price of the property up. That's why we say that's where the real money is made, is in asset management, because that's how you get the property to perform, and that's how you execute your business plan. So this is going to be a 14-day event, and I know it sounds crazy, but there's going to be 2 speakers a day for 14 straight days. We've got a VIP aspect too, where you can have Q&A with the speakers afterwards, but we have 30 plus speakers, and they're the best in the industry, and I'm really looking forward to it, because alongside having this, we're also learning how to become better asset managers, right? So we can implement the systems that we're learning from these people. So we certainly have a lot to learn, but I think it's going to be a really, really awesome event. And you can go to amsummit2020.com to find out more about it. Again, it's completely free. We just want to get the word out there that asset management is just as important as closing on a deal.
Yeah, and for all of our listeners out there, no matter what your skill level is in multifamily real estate or real estate of any kind, this is going to be an excellent event, and I'm looking forward to it. I'm already signed up myself, so looking forward to all the speakers.
Awesome. Thank you for that.
Yeah, that's awesome. I think obviously, our short conversation here is a testament to how important this part of the business is, right? It's no longer just buy a property and hope that money comes, that mailbox money starts coming in. To be truly successful, you got to be a skilled operator, and especially in the environment that we're in the markets that we may see, in the near future. I think the true operators are really going to stand out. So set yourself up for success and get on this summit, which is, like you said, 14 days is going to be phenomenal. So I know you guys do a ton of other things. You got your podcast, you got a couple of meetups that you run as well. So where are some of the other places that the listeners can connect with you and go to learn more about what you guys got going on?
Yeah, our podcast is Passive Income Through Multifamily Real Estate, and we have 2 episodes a week. On Mondays, it's more geared towards educating people who are just getting started and passive investors. On Friday, we have actually an asset management session. They're short, 10 to 15 minutes, but we focus on a very specific item, whether that's closing, due diligence, renovations management, lease-ups, managing the manager, things like that, which are a lot of the topics we'll be talking about at the virtual summit, but not topics that are often talked about.
Awesome.
Excellent. Wow.
Very cool, man. So I'm going to throw one more curveball at you, because I know we touched on it briefly with COVID and the things that we got going on right now. Where do you see this going and impacting, the real estate market and the apartment buildings that you guys are picking up and operating today?
Short term, I think there's definitely going to be some hurt. I think still too early to really understand what's going to happen, because we just got notices from the governor of Arizona, where we invest, that they're extending eviction moratoriums. Now you have to prove that you're impacted by COVID, but it's so early in this game. I still think there's another 6 to 12 months of damage just till we start to see what it's going to look like. So I certainly think there's going to be some hurt short term. Long term, I'm very bullish on multifamily. I think this is going to actually impact it for the better. There's going to be more people wanting to rent versus buy, and there's less construction happening now. So cities that were starting to be overbuilt are no longer being overbuilt. So the demand for existing apartments is going to be even greater. So I think long-term multifamily, if you're a long-term holder, you're going to be just fine. But really, you've got to focus on your operations right now over the next 6 to 12 months to make sure that you're cash flowing and not losing any money, because I think September through December are going to be the struggling months. Collections so far have been fine. People are surviving. I think September, once the $600 of unemployment falls off, we'll see if there's another stimulus package. I would say that there probably is going to be one, but once that money runs out, how does it perform? How do people pay their rents? Because right now they're shutting places back down. They're not opening places back up. So it's a really interesting time. So it's tough to say.
Awesome.
Well, we really appreciate you coming in and sharing your wealth of knowledge on the asset management, and your summit is a great program. I hope everybody goes and signs up for, and just wanted to say thanks for coming in.
Yeah, absolutely. Thanks for having me on, guys.
Yeah, I really appreciate it. And again, that's amsummit2020.com. We'll link to it in the show notes. But 14 days of free content from experts doing it in the industry. So definitely a wealth of free information there. So again, Kyle, thank you very much for jumping on the show, man. We appreciate it. So thanks.
Thanks, Mike. Thanks, Larry.
All right, man. That was Mr. Kyle Mitchell giving us the educational bomb on asset management, man.
Yeah, talking about how his previous life, again, this is a running theme, talking about how things he did in his previous life set him up to rocket in real estate. So no matter what your skill set is, man, you guys, whatever your skill set is in your previous life, find a way to implement that in your career in real estate, or just investing and running the marathon for financial freedom, however you can.
Yeah. Yep. Man, we've talked about that a handful of times before around, the skill sets that you're honing and you're perfecting in your profession. Like, they do have a place in real estate. And, we're talking about him, managing the golf course business that he was in, or the golf shop business that he was in. If he had just kind of fumbled through that position until the next thing and until real estate, he probably wouldn't have been as successful as he is, but he owned that skill and he crafted those skills that made him a better operator and a better real estate investor. So whatever you're doing, figure out how you can perfect it and how you can then roll it forward towards, what you want to do next. And we talked about it a ton, man. There's a ton of skills in regular jobs and then what you're doing now that can apply. So don't just fumble through. No,
pay attention and get as much out of your experience as you possibly can.
Yep. So all right, man, let's do a call to action. What do we got? It's something related to an asset management summit, I'd imagine, huh?
Yeah. I'm thinking we should probably have them go sign up for that asset management summit, because, they're going to be teaching you a lot about how to manage whatever asset class you decide to get into. And if you don't have the proper education on managing the assets, like Mike said during the beginning of the podcast, you would rather invest with a mediocre deal and a stellar operator than having somebody that doesn't know how to manage their assets. So you need to learn how to manage your assets to make money for your investors and instill the confidence and make those connections that are going to allow you to buy larger and larger properties.
Yep. Even if you don't have investors, you obviously want your property and your portfolio to perform the best it can, right? So you definitely got a lot to learn from this free virtual summit that Kyle and his team is putting on. So go over to amsummit2020.com and reserve your seat. Like I said, it's free, 14-day summit. It's got a ton of really big names that are going to tell you, everything they know that they've learned throughout their time in the industry. And again, the common theme, man, education is key, right? So when you got a free opportunity like this, when you can learn from some of the best, you definitely want to take it. So amsummit2020.com to reserve your seat for free.
That's it. Well, that's everything I've got for these guys. What about you, Mike?
That's it for me, man. So thank you guys for tuning in to another episode of the Real Estate Marathon Podcast. See you next time.
Take care.
Thanks for listening to the Real Estate Marathon Podcast. If you found value in any of the content from this show, consider supporting us in the following ways. Subscribe to the Real Estate Marathon Podcast. Leave a rating and review. Continue the conversation with like-minded individuals on social media by heading over to the Real Estate Marathon Podcast Facebook group, or follow us on Instagram and Twitter at Real Estate Marathon Podcast.